You're introducing Joe.
Okay.
Phil might have gotten lost. Bill?
Really, you met Joe? No.
I'm sorry. Phil's and the jacket. Who's over there? That's Mike. I'm sorry? That's also Mike.
Who's the house?
Joe.
Joe in like 2 years, 1 year.
Yes, guys.
What company do they represent?
Let's start with one.
Oh,
National Service. They're independent. Design Institute. If you're available for tomorrow, we're going to be doing just a wrap-up conference call. Just kind of see how everything went and talk a little bit about it. Kind of spitball for the next one.
what are we doing? Make myself.
Let's just, try to get Awesome.
Thank you for that. Okay. They're signing in here, and then have you guys signed in yet? Okay. When we've done that.
We're gonna do, this is their idea, but I'll put one of these into the computer. But each speaker is going to introduce themselves.
Oh, all right.
Wait a minute, you don't have to introduce anybody.
Oh, hey, wait, it's okay. What's happening?
You say great, now we have the floor for
I
questions.
won't make any goofs and say something name will I?
Look at you.
Good evening, everyone. We appreciate all of you coming tonight. My name is Steve Sprinkles. I'm with BMO Harris Bank, the downtown Orlando office. We really appreciate you taking time out of your schedule and visiting with us tonight. Hopefully you're going to find it very educational. Learn a lot of stuff. I'm just going to go over a couple of housekeeping issues and I'll introduce you to some of the other folks. First thing is if you could put your phones on silent or vibrate so don't interrupt us. That'd be great. Bathrooms are across the lobby, through the open door, and are down the hall on the right, I believe. When you go through the door, don't let it close behind you because you'll be locked in. Just stand right there. Yeah, but it's propped open. Just don't open it. Close it. Let's see what else I have. I'm going to introduce you to Drew. Drew, come on down. Drew Eubanks, he works with me at the downtown office. He kind of helped set this up, so thank you for doing that. And go right ahead.
Worked tirelessly for all 6 hours. No, I'm just kidding. But it's a lot of fun. I'm really glad to be here. Really wanted to thank the Concord staff and your management team here at Northbridge for allowing us to come out. We've been putting this together for a couple months now, actually. And when the idea first came, we were just really excited about the idea of being able to have a venue where we could talk to these folks that would not maybe normally come by. We gathered folks from multiple different lines of business, but all the people here that are going to be speaking all have to do with the exact same process, which is home buying, which is the reason why we're here, and this is also, I mean, you guys live in this apartment community, it's an amazing community, but ideally, at the end of the day, who wants to buy a house? Who wants to have their own home, their piece of land? That's kind of what brings us all together. It's the American dream, and it's a beautiful thing. And so we want to kind of get you there and give you some great steps on how to do that. And so I'm glad you're here. If you did not get one of these, raise your hand. One of these here. I'll get to this in just a second as you pass it out, but I kind of have a couple little nuggets of wisdom, little things to bring to you guys. There's an old proverb that says, a good name is to be chosen rather than great riches, and favor is better than silver or gold. Anybody agree with that? Anybody think that's important, having a good name, having a name that is above, dispute? Yeah, having respect. That's a great way to put it is basically have respect at the end of the day. And that kind of comes out of this idea of, in America today, we are, in this society today, we're more cash poor and credit rich than we've ever been in our entire lives. That's not necessarily the best way we want to be. That's not how we maintain financial stability. And I'm sure that many, if not all of you in this place have had a moment in your life where you realize, hey, maybe my living expenses or my outgoings, my bills and my standard of living is beyond what the money is coming in, and you find yourself in a tough position that might create debt, which is a terrible, dirty word, right? Debt. Nobody wants to be in debt. It's the scariest thing in the world. And why? It's because of what I just said. A good name is more important than riches or gold. At the end of the day, we want to be debt-free. If you want to be debt-free, raise your hand. I'm not preaching myself right now. Y'all got to get in with this. Okay? If you want to be debt-free, thank you. I got to testify to that. So, there's no such thing as good debt. And I put that in quotes when I read that, but there's no such thing as good debt. But there are instances where we may be in need of something, but do not have the immediate means to purchase it. And that causes us to be in a situation where we might have to reach out to folks like a banker or any other third-party person that can provide some finances for you to get to where you need to be. That's not wrong. But at the end of the day, we understand that debt is not a good thing. At the end of the day, we want to know that the money coming in our account is going to stay there. That what we earn, we get to keep, and it doesn't have to go somewhere else. So that in that respect, there's no such thing as good debt. However, there is positive debt and there's negative debt. And I hope you don't think I'm contradicting myself when I say it that way. But positive debt is something that you can use for your betterment. Positive debt is something that you know will be an asset at the end of the day. Can somebody give me two things that they think are positive debt? Anybody? Shoot that one. Well, that's investments is your own money, so it's not really what we considered a debt, because that's what you're getting out. Matt?
Home and land.
Home and land. One other thing, anybody else? It's very valuable. Actually, no, and I'll tell you why in a second. One other thing, and everybody in here, I'm pretty sure, has a level of this. Education. Education and home and land, probably the two largest ideas that we have positive debt. Because a lot of folks take out student loans to go to get an education. And at the end of the day, why is that positive debt? Because if you get an education, you get a better job, you make more money, and you're able to pay that back. It's an asset because it's going to earn you more. It creates a greater level for you to earn, right? The other thing would be home and land. That's an asset because the only thing the world's not really making more of is land. That's it. There's a finite amount of it. There's only so many houses going to be built in the world. There's only so much land that can be owned in the world. And so therefore it's appreciative. As we grow as a population, as a human race, there's less and less of it. And so it's worth more and more on a daily basis. This is where we get into the crux matter where it's very important. Why, and I'm kind of pitching this up to Chrissy, who's coming up after me, but this is kind of where it's important because we know that that's important to get in there. Two last things here. Without a proven track record, it's hard to expect someone to lend to you, even if you're more than capable of repaying. Without a proven track record, it's hard to get someone to give you something, right? When you're a little kid and you're, you had like your buddy down the street, and you're like, the ice cream truck's coming, you're like, yo, let me hold $1, man. I gotta get this ice cream, I'll pay you back. And you know, you done it before, you never paid the guy back, he's probably not gonna give you $1 to buy that ice cream. But you've done it before you paid him. You're like, yeah, sure, I know you're going to get me in like an hour, you go back and get it from your parents or something like that, you're good to go. Or you're going to mow my lawn. So, that's how it goes. You have to have a proven track record. The last thing I want to say is credit for the sake of credit. Credit for the sake of credit, that means going to department stores, going to the mall today right here, and going to get 15, 20 different credit cards from every store just because they're going to give you a good deal or a discount. Credit for the sake of credit is irresponsible. But credit for the sake of financially positioning yourself for success is invaluable. Does anybody agree with that? Yes. Does anybody agree with that? Hallelujah. I got hallelujah. That's good. I'm not trying to preach you guys, but I am trying to give you a message. And the message is that you can be responsible with your assets. You can be responsible with when you're in a position where you do owe maybe to a bank or something like that. You can be responsible with that. Never bite off more than you can chew. Be responsible with your assets. Use things for your betterment, and you'll find yourself successful and you'll find it easier to sleep at night. I did have a couple more things, but I'm not going to go over that. Maybe later seeing me, I'll go over the facts and the fallacies behind credit, or we can just set up an appointment and you can get all this craziness at a local branch near you, and we can sit and we can talk a little more about that. Thank you guys. Real quick, right there, take this home. The Credit Builder Program is what we have. If you're in this place and you are not 100% sure that if we were to walk in the branch tomorrow and get you apply for a home loan, you get approved because your credit was in right standing. If you have dings, dents, blemishes, something hurting your credit, take a look at this. I will see me afterwards. I'll go over this, and it's a great program that we have that can help you get into a position where you can be qualified for a home. One person I want to introduce real quick, Mike Lynch, is a great partner of mine, and we've been working together. He works for Trinity Enterprise. He's going to introduce himself real quick and tell you a little bit about what he does in a quick blurb. And our table's over here. We'll talk a little bit more about that. What we deal with is in credit repair. And Mike's going to tell you more about that.
Thank you, Drew. Thank you all for coming. As Drew said, credit real quick. What I do is credit repair. The other side of it is what you had up on the slide when he gave you all the credit building program. That's imperative to have some good positive credit. When he said not for the sake of credit, you want to run out 15, 20 credit cards, but to have some things positive are very important on your credit. What we do is remove negative debts. A lot of times people are in a better position. They have the money, they have the job, they have the things they need to buy at home, but they have negative things on their credit. Collections are mainly one that most people have, they're familiar with. They'll go out and pay them. They think that's the best thing to do. Logically, morally, ethically, it works. The problem is it doesn't come off the credit file. You have a negative history behind, and your score takes a real long time to creep up. So what we do very simply, and Damaris is back there, she's one of my account managers, she works with me when we set up over the group. We go back and we remove a lot of that trail. We actually guarantee to remove about 70–80%, give or take, no matter how much you have on the credit file, and get you back in position so that positive credit can shine through, put you in position to have a good credit score and buy property. So we're here to check out after, we'll talk about it, we can do whatever we need to do to help you guys out. We appreciate it, and I'll turn it over. I don't know, Drew, who's next?
Christy.
Christy.
Thank you. Before I get started, has everybody signed in on 2 sign-in sheets? One was the BMO Harris and one was for the community. No, you only have that one. Has everyone signed in on the BMO Harris? No, you still need to? Okay. So we'll just, if you wouldn't mind just passing it back. And then the community sign-in sheet is back here. Is there anyone else that needs that? Okay, so we need it to come. Yeah, if we wouldn't mind just rotating them all back to the tables just to make sure that we've captured everybody, that would be great. I've given you 2 pieces of information on your table. One is a very comprehensive steps to home ownership. Due to our time constraints this evening, I'm not going to go through this page by page with you. What I am going to do is I'm going to take out and go with the 5 simple steps. When we get to the point where we're serious and we are going to move forward, we will go through this other packet and we will cover it inch by inch and make sure that there's no questions on it. Tonight I'm just looking to give you a brief overview, maybe give you some ideas of some questions that you want to write down, take away. You can make an appointment, have a more one-on-one conversation at that time. Is that okay with everybody? Good. Mortgage banker was BMO Harris Bank, and I've been with the company for over a year and a half now. I've been in the industry for 9 years. Mortgages have changed dramatically over the last 9 years. I was fortunate to come in when the market was way high and lent to a lot of people that I see now coming back down. My passion is first-time home buyers, education, and getting you into the right product for you. So what we do at BMO Harris, holding it upside down, can you guys read it? We have a couple of different programs that we offer. One is a pre-qualification program, and that is simply where you're going to sit down with me, you're going to verbally give me your income, your monthly debts. Monthly debts meaning installment loans, credit cards, anything that's going to show up on your credit report, not your rent, because that's going to go away when you have a home. Other mortgages that you may have if you own a home that you're renting out. You're going to verbally give me your assets, the income that you can use to put down, or the monies that you can use to put down on the home for the purchase. Based on that information, I will punch in some numbers, give you a calculation, give you a letter that the realtor is going to say, okay, great, you met with a mortgage banker, but it really doesn't tell me that your credit's been checked and so on and so forth. So this is just a general first step for you. The next thing that I have available to offer you is an actual pre-approval letter. That's when I give you the list of items that I need from you, including what you're going to need is going to be your 30 days of pay stubs, your W-2s for the last 2 years, your tax returns. I'm going to pull your credit. I'm going to ask for bank statements. That's when we're going to sit down with all of the documentation, enter it into the system, and get a full picture of exactly where you stand. That letter is going to let your realtor know that you're qualified for X amount of dollars with a monthly payment of whatever it may be. And that payment's going to include your principal, which is your mortgage, the interest that you're going to pay on that mortgage for the life of the loan. It's going to include your real estate taxes, your homeowner's insurance, and if need be, private mortgage insurance. Is everybody familiar with what private mortgage insurance is? I see some no's. Private mortgage insurance is insurance that a financial company, whether it be an FHA or a Genworth or other names that I could throw out there that aren't going to mean anything to you, they secure your loan and they guarantee your loan to the mortgage company. In the event that you default, they come in and pick up. It's a protection for the bank. Once we've done that, we've done the application, I will send your file to our processing center. They're going to go through and they're going to make sure that everything that I've put into the application and everything that I've collected from you paints the exact picture that we wanted to paint for the underwriter. I'm not cutting anyone down if anyone in this room is an underwriter, but we in my world know that underwriters go like this. So we have to make sure that we have painted the picture exactly how we want them to see it. If there's a boo-boo on your credit, I'm going to have to ask you for a letter of explanation. There's things that we have to go into. We have to paint you because all they see is paper. They don't get to meet you. They don't know your personality, and I can beg and plead with them, but they're going to say, "Okay, Christy, enough's enough. This is what I see." So the processor helps us do that as well. Once you get to the processor, that's when your loan commitment letter is going to be issued. They're going to give it a quick, to the underwriter for a quick look. The underwriter is going to give it back, say, okay, everything looks good, and they're going to issue us what's called a loan commitment letter. This is a letter from the bank that is committing to you that we are going to lend you X amount of dollars for X amount of years. We don't lock in the interest rates until you have a purchase contract. We'll get to that in a minute. But it lets you know that, yes, you're approved, so that when you go meet Jacob, you can show him the letter, and he knows, okay, I have to keep you at this price range. The worst mistake that any of you can do, and I can tell you from personal experience, is meet with Jacob before you meet with me. Because what happens is we kind of put this picture of this most beautiful picture, perfect house in our head, and then we realize what we can qualify for, and nothing gets us to that. Nothing comes in close. And then you're kicking yourself in the behind. At least I know I did. So we will work with you. I will work with you, as well as the other people that we have in the room as a team, to make sure that we get everything where we need to be. If you started to go out and look for homes and you just weren't happy with the price range, we take a step back, we start saving more money, we figure out what you need to do to get there. With BMO Harris, we have several different mortgage options for our buyers, especially first-time home buyers. We have a program that's called the Neighborhood Stabilization Program, and essentially what that program does is it allows buyers that are purchasing homes in certain census tracts. It doesn't mean that your income falls into it, but the house could fall into a certain census tract that is considered to be 80% of the median, median income based on the surveys that they do every 3 or 4 years, they send them out or something like that. If that house falls into that area, then it could fall under our NHLP program, which would be, it's a program that allows you to put as little as 3% down, have a lower credit score. It's a portfolio loan, meaning that the bank does not sell it to anybody. We also work with different down payment assistance organizations. The City of Orlando right now is the one I work mostly with. Then we also have programs, which is called an FHA mortgage. Have you anybody heard that before? It's a government loan. What they're going to do is allow you to put as little as 3.5% down. So now you put the 3.5. For most first-time home buyers, that's where your average savings or your average cash in your pocket for the down payment needs to be. If you've been saving for a long time and you have the ability, naturally the more that you put down, the less that you're going to pay in that private mortgage insurance world that we talked about briefly. It's going to cut that percentage down. Once you found a home, your realtor and I will work together to ensure that, well, there's more people that now flowing through this, not just your realtor, but we will work hand in hand with the other partners to make sure that you're covered on every aspect of making sure that you have your home insurance in place, make sure you have your home inspection done, make sure that everything that needs to be done, your title, which they'll go into a little bit later for you, everything is in place so that when you come to the table to close on the home, you know everything about the process of the mortgage, your credit, everything else that goes along with it, the inspection, the products that are available to you all the way through, so that when you sit down and sign those papers, it's a relief. Because in the beginning, this is the hardest decision you will ever make. Because it is the biggest decision that you've ever made. I haven't had vibrating, I apologize. I can go into more specific details on different products. If this is, as this is just a general overview, but I wanted to, my most important thing that I wanted you to take away is that it can be a very simple process if you're working with a bank that is going to help you and guide you and be your partner through it. And that is the most important part of it. Any questions at this time? No? Yes?
I was told that veterans get like a special kind of...
You're absolutely correct. We offer what's called a VA mortgage. And with the veterans, that's the veterans program. It's a different percentage down. It's based on what the whole bunch of different calculations. I can't tell you right off the top of my head what you would qualify for, but each veteran does have the ability to purchase a home, and in most cases with no money down. We do offer that program. We offer the FHA conventional financing, which means that you're putting 10 to 20% down. FHA, you're putting 3.5% down, and it's a government loan. NHLP is a bank, so it's a program that only we offer, that's 3% down. VA and USDA, and we also lend to Canadians. They have a completely different. It's very different. Yes, and you offer that. Yes. USDA is for more rural areas where they're outlying. It's not. You're not going to find that in this general vicinity. No. In this, oddly enough, in this general vicinity, the NHLP because of the number of foreclosed homes, has dropped the census tract ratings in the area. You're going to find a lot of homes that you could qualify for the NHLP, the FHA. The NHLP, yes, the NHLP is strictly is on the BMO Harris program. I think we have another question. You have a question? Ask. Somebody else maybe making it too. Are you sure? Okay. Yes.
My mom just recently moved to Missouri, and there's a program there about foreclosure homes, since there's so many. But you only have to put like $100 down, and then you work with the bank. Is there any kind of bank there that, like, do you guys offer like a program?
I can honestly tell you that I have not heard of that, no.
Okay.
I would think, and somebody else may want to help me if they've heard about this, I would think that would be the bank that owns the home might be offering a program of that nature. We as an institution don't have any foreclosed homes in the Florida market. But that might be something that's, just depends on the area. I have not heard of it, but it doesn't hurt to check into it. Some banks have a list on their website of foreclosed homes. Yes, Matt.
Okay, that NHLP sounds pretty awesome. 3% down, that's probably the most amazing thing I've ever heard. One, how do I get more information about that? But then also, how do I qualify for that? Is that special, specific to you guys, and you guys have pre-qualifications? Or can just anybody go out and apply for that?
NHLP is a program that is offered by BMO Harris only. The qualification for it is that you must have a 620 or higher credit score. The NHLP program is directed towards certain census tracts or areas where the median income is 80% or less. And if that's something that you're interested in, let me know. We can definitely run some numbers, look at different areas and find out, but it is a BMO Harris product. Any questions? Anybody else? We would have to look at the timing of that, yes. If anybody else has any other questions, write them down, let me know, but I'm going to go ahead and turn the floor over to Jacob, our realtor, that's going to present next. Wait, the slides go back up and run.
Evening, guys. I might be able to answer some of the questions that have been asked. But real estate, it's really hard to talk in very specifics because it's really case by case. So I wasn't really sure what type of group as far as where everyone is going to be at in the process. So I figured I'd talk about some generalities. And a lot of people have some confusion about the type of sales that are out there. I know you've all heard of bank owns and REOs, short sales, and now what's kind of starting to come back is traditional sales. So I figured I'd kind of touch on that and kind of get as general but somewhat specific based on that. So for short sales, I'll click to the next one. Short sales, how it got its name is not that it's a short sale, it's that it's being sold short of what the owner owes on the property. So that's kind of how it got its name. The average time frame from once you put in an offer and it's accepted by the seller tends to take about 3 to 5 months, depending on how many lenders are involved. So again, 3 to 5 months is typically about an average for each one. So, for instance, I've had a listing that it took 9 months because there was 2 lenders involved. Wow. Second lender tends to get less and can be a little more difficult to release the seller of selling it short. So, why it takes 3 months? From the time that the paperwork is received, the contract, the seller accepts it, everything then goes to the bank, and the seller has to provide nitty-gritty details. I mean, past 2 months bank statements, past 2 months pay stubs, and every time they get a new one, that's got to be updated. So a lot of information goes to their lender, and once they have all the information, it's then assigned to someone who's going to be working on that file, at which point they review everything, make sure they have it, and then they have sometimes an appraisal or an appraiser, or they hire a real estate agent outside both the listing and buyer agent to go out and what's called a BPO, a broker price opinion. It's kind of a snapshot, you could say, to what they think the house is worth market value-wise. So it's not a true appraisal, because those cost a lot more than what a BPO is. So it's cost-effective for them, you could say. And so once that comes back, again, more time to kind of go through and look at all the reports and the comparables, and then they kind of come back with a price. It could be higher than what you offered for the house and what was accepted by the seller, but ultimately the bank, the lender of the seller, has the final approval to say yes, we'll accept your offer, or no, we won't. We want more, or we will accept it. So also it takes time to figure out what's going to happen to the seller, being that they can't pay the full price that they got the loan for. Could it be, and you might know someone, that's also why I'm kind of going into a little more detail, because you might know someone in this situation, and part of why I wanted to be a part of this seminar is because people tend to just stick their head in their sand and hope it's just going to go away. There are different options out there, different programs. You just need to not be afraid and ask questions. So some of the things that can happen to sellers, and I can go over this with you. There's also a short sale negotiator I work with. I know attorney firms. I've built relationships. I'm all about that. That's kind of what real estate is about, relationships. So, but again, a couple things that happens to the seller is their credit might get dinged. The difference between the sales price and what they owe, so let's say they owe 200, sells for 100, they'll actually get 1099, the difference, that following year. That could happen, which means they have to pay taxes on it. Wow, yeah. Or they'll have a deficiency waiver that they can come back, and after you, within 5 years, they say they'll come back within 5 years, and then they have 20 years to actually come back and collect. So those are some of the things that confuse face. So if they're not going to waive the deficiency, that is the balance, the difference. They have 5 years to come back and say they are going to collect it from you, and then at that point they actually have 20 years to actually collect it. So there's definitely some routes. I wouldn't stick your head in the sand and go into foreclosure or file bankruptcy. I definitely recommend talking to an attorney and seeing what's the best route to go for you. I wouldn't just talk to an attorney, talk to other people's. I've unfortunately heard some attorneys can steer you towards bankruptcy because it's beneficial to them. So just be aware of that as well. And closing costs, something that Christy goes over with you as well, is closing on a home. There are certain expenses that you have to take into consideration. But typically with a short sale, banks are willing to give 3% of the sales price. So, take that into consideration, and the home still has to appraise. Go ahead and do the next one. Bank loans. Instead of dealing with an actual person, you're dealing with the bank. They own the property. The price is approved. Average time for that is about 45 days, depending on your financing. Cash, you can close in 2 weeks. You know, if you're doing FHA conventional, it can be 45 days, it can be 30, depending. Like I said, it just really varies depending on the person and what they're going for. And again, average closing costs, what I've been able to come across is still 3%. And again, the house still has to appraise for that. Next one. Traditional sales, something we're starting to see come back a little more, is the owner is the seller. The price is approved. They put it on there. And hopefully their real estate agent got together and came up with that price. Average close, 45 days cash. It could be a week. It just, again, depends. And then for closing costs, you can negotiate all of that in, so you're coming with less money to the table. But again, the house will still have to appraise. So, kind of things to think about when looking at purchasing a home is what's your time frame. If you're wanting to consider short sales, take that in consideration, depending on the average of what they sell. What type of loans? We kind of went over that. USDA is another one. I tend to not see those too much, and people tend to be more in like the city. But kind of be a little more not specific, but I'll break it down. Not only do you have to qualify for USDA, but the house has to qualify. So it's the location, as Chris was saying. So, that VA we were talking about. And closing costs. That's another factor on top of that down payment that you have to look at coming to the table. And again, Christy, that's something that she goes over as well. It's called the truth in lending statement that she meets with you. I know we're going to be having some question time at the end, and there was a video I had for you, but we were having some technical difficulties getting it on the computer. So make sure you guys give me your email so I can send it to you. It's a really good video talking about where things are at now, homes on the market, average days that home stays on the market. It's good for both buyers and sellers, and it just really sets the expectation, which I'm very big on. So hopefully you got some good stuff from it. I don't know what the time frame I have left. If I have any time for questions, wait, do I have any time?
If we can hold questions to the end, I kind of got in trouble for that, so sorry. But I have a good thing coming up next, so you guys will appreciate.
Yes, I'm excited.
Holding the questions to the end.
Oh, you did?
Oh, yeah, who has not put their name on a raffle ticket?
Who didn't get tickets? Y'all got one ticket. Everybody got tickets? Yeah.
Yeah.
we had some.
No, we just have the number. The number matches. Keep your hands raised if you don't have one.
Y'all have a little green ticket, right?
Everybody has a green ticket? You're gonna want to make sure.
All lined up. All
At least we
right.
know you're awake.
We got all kinds of things. We're going to have some stuff now, and then we're going to have some stuff at the end. Okay? So, we got some great stuff.
This is for yours.
No. What do we want to pick? Or does it matter? Want to
We'll
with
start
Northbridge?
with the gas
With
card.
gas card, okay. 572590. Yes. Let's do one more. This is just one more. Trust me. 572570.
Right here.
Yes.
All right. Yay.
All right, how many more do we have left? We have,
We'll do a couple.
let's do a couple more. 572, 569, 572. Oh! I think this is appropriate for you. What do you think? iTunes gift card work for you?
Nice.
All right, a big thing.
Last one for now. Anybody need water or?
Food's on its way, but keep it up.
572-605. 572-605.
No? Okay. There were some extra ones put in there.
Pretty sure that one's mine.
Trigger.
I just lost it.
Did you really? Go find that one here. 572-597. 572-597. How many extras did you guys put in there?
Wow.
Also mine.
Suspense.
I think you're playing games.
Who will be the last?
572-572. Yay!
And you get it out here.
2 free weeks of rent.
You live in the community, correct? You do not live in the community?
I'll
Sorry. It wouldn't benefit you if you didn't live here. Do you plan to live here?
Well, that's good news for the rest of us. All right, so who's your next speaker? Drew.
That's going to
Steve, they're gonna hold on over here.
our friendly home cyclists are going to be putting us to get it going.
Take that. Sorry.
Someone has to be here.
They are
Oh, they are.
on their way out in here.
Oh, that's awesome.
So it's good. There you go.
That's how you do it. You move it in place, automatically get 2 weeks from.
Yes.
All right, so the best part of what you've already heard so far is all that is free stuff. You don't pay for our services. So the realtor, you don't pay for. You don't pay for the mortgage person. You don't pay for me or Drew.
So if they got there, I'm okay with it.
Yeah. So that's a great.
Not allowed.
That's a great thing. You get all kinds of expertise without having to pay for it. So, thank you. We're going to go ahead and continue on. Who's next?
Our friends Joe, the home inspector, Diane, go over here.
Great. Thank you. Take the floor.
I don't know if any of you have ever hoped and wished and prayed that a problem would go away by sticking your head in the sand. It generally doesn't work that way, does it? That's kind of what we do, in the sense that the reason you want a home inspector, Christine will attest to this. She bought a home once, and she used a home inspector, and it didn't turn out well, so she didn't buy the home. So the next time she didn't use one, she renovated the section of the home, the plumbing, and at an extreme expense. But that happens to a lot of us. You know, we think we know something, or we're just hoping that it works, and it doesn't always work. We get inspections in our lives every day. If it's from when you buy a car, you know, these Carfax now, you can check it out before you buy it, because you might not have a value. You know, it might be okay, but it may not. You just want peace of mind when you sleep at night. When you're about to take home a puppy, you want to know that it's healthy. A baby not in the hospital. Even a sports athlete, before they're trading now, they have to go through a rigorous inspection. You just want to ensure that your investment is sound. Does that make sense? In choosing a qualified inspector, we know that this is the biggest purchase you've had in life, and it's one of the largest purchases. And a lot of times you're just, once you get close to signing that piece of paper or even making an offer, you get that finish on it. And it's exactly what you think it is. Stress. And yes, I've built 300 or 400 homes in my life, and I can tell you, I've watched relationships fade just from a home purchase. And a lot of it can be alleviated if you know what you're walking into. You know, if you know that the home has certain things, and every home's not perfect, everything will not line up, the stars will not align. But that's okay. You just want to know what you're walking into, right? So this helps. In terms of our service, there's two of us that are here tonight. Mike is a certified instructor. He trained me. He's done probably 3,000 of these inspections. I'm a licensed builder and an inspector in McCuffey. The thing that makes the difference is not just the amount of time you spend on it, but it's the amount of time you have behind you. And things he finds, that we find are not your typical things. And again, this panel box may not seem like anything, but it's called double tapping. And if you put two wires in the same breaker, you're in for trouble. But those are a lot of things people don't see or take time to find. So that's what we do. And we're fortunate to have Mike, who not only teaches inspectors all over the country, but he also works with them. So that's the background. Mike?
Just stole all my thunder. So I don't know where we go from here. One thing he told you that's so true, there's no such thing as a perfect house. It's just not. And sometimes we get into technical trouble. There we go. And but what we try to get across to everyone is you really didn't hire us to tell you how beautiful the home is. You should know that. And you come with those expectations, you come with that love of the house. Unfortunately, we're there to maybe tell you some of the things that are not correct. Regardless of the house you select, and what's going on? Hey, we live in Florida. That's another thing. High maintenance area. Not bad. It's what we pay to live in Florida. A lot of salt. And so you have issues there. That's something else we incorporate in our inspections, is actually giving you tips and ideas and suggestions on how to maintain your property. The number one issue we run into with houses, and everyone is a little different, is that lack of maintenance is a major player. So you want to maintain that. So regardless of the home, we're always looking to identify potential problems, to help you fully understand the property's overall condition, because that's very important. Is that right?
Yes.
Consider possible repairs and upgrades. You have an idea going in, and provide confidence for you, peace of mind. There's enough stress with the unknown. Having an idea of the condition of the house it's invaluable. And make it safe. That's another big thing, a big component of a home inspection. And you can see we actually inspect the roof. Hopefully we haven't got much of that in Florida. Probably need a little mountain to jump off of. And we actually go to the frost. And no, that's not cotton candy. Some of these things are pretty nasty. I will tell you, if there's snakes and raccoons, we stop. Okay, we don't do that. And really, we inspect all points in between. You're going to sign a buy-sell agreement that says they're going to warranty something or not going to warranty, and that's great. But a home inspector is doing a proper job is going to inspect all aspects of that house. And the most important thing for you to understand when you hire a home inspector is visual. We don't have magic eyes, it's all visual. From exterior cladding having problems, structure having problems, to electrical issues. And this is an area that there's just some hidden things out there, so to speak, that a qualified home inspector should pick up on. Heating and cooling is pretty important down here in the summertime, isn't it? So all of these things should be actually in your home inspection. The plumbing, okay? So we need a general idea. And we get creative plumbers. I don't know exactly what he's trying to do there, but it's not obvious. He didn't either. So I'm a little off with that. And then the grounds itself. Where's the water going? It's very important. You'd think that was so simple. Well, water sitting at a foundation of a house for a period of time, on and on and on. No, I'm not answering the phone. I'm trying to it's not good for the home. So we need to look at those things. And yes, we even do swimming pools. Hopefully you have parks or whatever that is in there. He doesn't look overly distraught. I think I'd be a little more upset than that. And we do a lot of other things, windmill. And we could go into the fine minutia and all the details of how a windmill is performed, but the truth of the matter, Joe and I had decided that we're going to actually communicate up front with the client. See, some houses have wind mitigation. There's no sort of panel. There's nothing that you're going to receive of. Now, we don't know the percentages of what insurance company's going to guarantee, but if you tell me when the house was built and nothing's been done to it, I can pretty well tell you whether you're going to save any money by paying me $150 or whatever it is. So we just felt like that was the thing to do. A kind of old school, both of us, is value. We feel like you should get value out of our services. And we'll provide an executive summary. Everything we're using is, of course, electronic. And not only do we have the summary, we also have your choice. You can dig through the whole thing. We've seen you about a 40-page report on the house. And it's all good data. But sometimes you just want the high points. And either way, we can accommodate that. That's it?
I'm your clicker.
Yeah.
The one thing we also wanted to emphasize to people is you don't know us from Adam. We understand that. And a lot of the anxiety is that you go and pay for something and you don't get the value. You know, I bought a car, so many cars, and walked away from it and realized I didn't get the car I thought I was getting, etc. But our guarantee is very simple. At the end of it, if you're at the inspection and you're not satisfied with what we've done, there's no charge. We don't want you to pay. We want you to be satisfied. So that's one more stressful point of view. After you close, we also have a service where we'll track your appliances for you. That means your car opener, your HVAC system, your appliances, and we'll let you know once a year whether or not there's been a recall. And why is that important? Because a lot of times with the recall, they literally will replace your replacement. And you wouldn't know that otherwise. That we know that because we have ways of tracking. And again, at the very end, let's see.
Where is it?
You're fine. That again, the 100% guarantee is just so that again your relationship stays sound. You don't have that pit in your stomach, and that you get the home that you think you're getting. And all homes, again, one more time, are not homes. There is no perfect home, and I've built homes from 150,000 to 2 million. There is no perfect home because it's in your mind what you think perfection is. Okay. There's always a way to fix it, but it's always nice to know what the things are that you can address, because you can always address them. And in the end, took the head out of
Next up, we have Phil Lucas.
If there's anyone who has not signed this, please do so.
After you only got to wear it exactly.
My name's Phil Logus. I'm an attorney here in Orlando. I practice downtown. I do corporate business real estate transactions, mostly commercial finance. I represent banks who make loans. I also represent buyers and sellers of real estate, residential and commercial real estate. And I'm here to talk to you about the most exciting thing you'll hear about tonight, title insurance. Yes, exciting. There's all sorts of insurance. As you know, there's health insurance, there's life insurance, auto insurance, there's homeowners insurance, and we also insure the title to your property.
I'm so sorry.
That's
I apologize.
Okay. It's just a PDF.
It's getting to it. It's no problem. This is a bacon soup here, so getting her little buying these is a different story.
Can't find it's not a problem.
Well, already we can do another job.
Hey!
606.
502-676. No?
Yeah, mix them up good,
572-592.
Wow. That's good, that means there's less tickets in here.
572-615.
Wow. 2 weeks, 3 minutes. You got it?
No worries. So, I'm just gonna, all right. Title insurance. What is title insurance? Well, title insurance protects an owner or someone with an interest in real property from defects, liens, encumbrances on title pursuant to the terms of the title insurance policy. There's various types of title insurance because there's various types of interest in real property. When you buy a home, you get a deed, the seller signs a deed to you that is an interest in real property. It's a fee simple interest. When a lender puts a mortgage on a property, they have an interest in real property. Is everyone here tenants? You have an interest in real property by virtue of that lease. So you have an interest in real property. Municipalities have interest in real property, they have easements. So there's all sorts of interests in real property. And we can insure those interests. So there are an owner's title policy that insures your fee simple interest. So when you buy a home, you get title insurance that would insure your interest in the home. The lender would simultaneously get an interest to ensure that their mortgage is a valid mortgage on the property. I figured the over-under is about 9-10 minutes before I start seeing the glassy eyes, so I'm gonna ramp it up. And then there's leasehold interest in real property. So a tenant, say Target, when they have a lease and they invest $5 million to build out their spot, they want to make sure that the fee simple owner of that property doesn't have any liens so that they can get thrown out. So why is title insurance important? Because the biggest investment that you'll probably make in your life is your home. Real estate's the quickest way to gain wealth in this country. So ensuring that ownership interest is very important. Whenever you buy property, the person that's selling that property to you has an interest in the real property subject to certain things. So it's important that you know what their rights are, what rights you'll be getting, and what encumbrances there are on that property. So there's a couple of ways we